Hello, I'm Dr. Deena Stacer. I am the doctor that makes house calls. I have a PhD in psychology and I have a real estate license. So I teach people the psychological real estate strategies to win when they're buying and selling a home. Today, I want to talk about how to shorten your 30-year mortgage loan by 5 to 10 years. And we'll talk about not only the financial tools and tips, but we're going to talk about why this is a psychological strategy too. You can shorten the loan repayment period by paying extra money to your fixed rate mortgage. That's a loan that the interest rate doesn't change. You can actually save thousands of dollars in interest if you pay toward the repayment of your loan every month. Let's say you pay an additional $100 every month to your principal, which is a $175,000 mortgage. Now, I know some of you listening to this probably can't even imagine a $175,000 mortgage. It's closer like to $500,000 or something. But in this example, you would reduce the length of your loan from 30 years by 5 years and 6 months less. If you pay an additional $200 a month, you would shorten your loan by 9 years. So in this case, if you have a 30-year loan, you now have a 21-year loan. And in this case, if you pay an additional $459 a month to your loan, you would reduce your loan all the way down to just 15 years instead of the 30 years. You will want to talk to your lender to make sure that your extra payments are applied to your principal, not to your taxes or your insurance account. And also, you need to understand that the current interest rate on a savings account in the bank is like 0.5% or less. So it's a great idea to look at other things that you can do to get rid of interest payments, like paying off credit cards, car loans, student loans, and of course your mortgage. Here's an example of the Equity Accelerator, which is a link that you can go to on the blog site that this article is posted. And you can play around with your own mortgage to decide if it's a good fit for you to make payments, extra payments. This is how they save 5 years and 5 months on their 30-year mortgage. First of all, the principal that they were paying monthly was $835.48, and they added an extra $100. So that's where the $935.48 came from. The total number of months that you're going to pay on a 30-year mortgage is 360. But what they did with the extra $100 is it reduced the total number of months to 294. The total principal they were going to pay with just a regular payment of $835 is $300,700. The extra payment brought that down to only having to pay on principal and interest to $275,000. So they saved in interest $25,741.68, which resulted in 5.5 years less than the 30-year loan. So this is an example, and it is pretty profound when you think about it. So if you have extra money that you can apply that's not going to jeopardize your family budget, it's going to allow you to move yourself in a situation where this will help, it's a really good idea to talk to a financial planner or a CPA or someone who manages money to help you figure out if this is the best alternative for you. Now, with mortgage rates so low right now, you need to consider talking to a financial planner or somebody who can help you decide what you should do personally with your loan or with some kind of investments other than paying down your loan. It just depends on your financial needs and your budget. And you want to talk to your family about the extra payments and the impact it will have on your family. This is where the psychology comes in, the stress that families feel when they're strapped for money, when both family members are having to work to have strangers raise their kids, when one person's working and the other person's not working because they're raising the kids, when there's not enough money to go around, even with two people working, everything related to finances and stress raises the anxiety level and the ability for families to get into arguments and constant stress. And I know that finances are one of the biggest reason people have fights. It's not everything, of course. There's family issues. If you have a high conflict personality in the mix, if you have some other strategies that are, or problems that are impacting it, that's a whole different story too. But extra money does reduce stress. So this is why paying off your mortgage may be an excellent idea. I don't know if it'll save your marriage, but it'll certainly help increase the amount of enjoyment you have because you're not always strapped and stressed for cash. Now, if you plan to sell your home within the next 5 to maybe 8 years, you probably may not want to put extra payments onto your home. Now, it does depend on your financial situation. It depends on your goals. It depends on the value of the homes at the time that we sell them in 5 or 8 years. We all know that. But if you're in San Diego County, we know that homes are not getting any less expensive unless we have a major economic downturn again. But they've crept back up to where some of them are even more expensive than they were before we hit 2008 and 9. So if you're thinking about selling your home, please talk to me and let me run the numbers for you about the costs of sale and what you can expect so you can decide if it's really worth putting the extra money in toward paying that loan down. Now, let's talk about getting equity out of your home. Equity is the difference between what the home sells for and what you owe on it. That's called equity. So if you need to pull money out of your home and the interest rate on the new loan you're going to get is higher than the current rate on your loan, it doesn't make sense necessarily to pay down the loan either with extra money. Those are all strategies you should talk to a financial person over. And those are people like financial planners, estate planners, CPAs, and mortgage lenders, bankers, people who are in that industry all the time. My opinion is talk to several. Don't just take one person's opinion because they may have a very strong philosophy one way or the other. And then when you start talking to other people, you realize that not everybody is got the right method for you that works. Maybe they're aggressive in how they tell you to manage money, and maybe they're not willing to do enough risk. So you have to find the one person that's most comfortable for you after you do some investigating, or have an arsenal, a group of people that you go to who work together. And if you don't know of these people that you have a trusted relationship with, I have several people that I do trust in each industry, and I'll be more than happy to refer you. So let's talk about the psychological impact of reducing your mortgage, because that's why I was starting to talk about this originally. So as you create more money in your life because you've reduced the house payment, maybe even eliminated a house payment, then you aren't having the stress of having to work longer hours to make the payment because there isn't one. And then in addition to that, you're going to have less pressure from your family because you aren't working longer hours, or there's more money to go around. And both of those really make a difference in people's relationship with each other. It's amazing how money can cause so much stress for people, but it's just, I've seen it for years and years and years. And I know that in conflict, one of the biggest factors besides kids and besides, expectations about relationships, money always creates a huge wedge. And then again, having less financial pressure reduces arguments and stress in the family, which leads to happier relationships and then more opportunities to go out and have fun and enjoy life because you're not always working and you can actually pay attention. And then also, the last one is that, there's more and more boomers that are having to work long hours, and they'll be working till the day they die, or they have to rely on family members. So we want you to come up with strategies now that will help you so that you can enjoy retirement years. You can travel with your family. You can enjoy those grandkids. You can enjoy a life that's less filled with having to get up and go to work and be distracted and miss out on the wonderful opportunities of the golden years. I'm Dr. Deena Stacer. I hope this little program has been helpful for you to create an idea and a strategy to look at how you might be able to pay your mortgage down, and or look at other options that will help you figure out what you can do to look forward to the golden years, the years when it will be more fun for you to enjoy if you're not having to work every single day trying to make bills get paid and trying to come up with that extra buck. I am more than willing to answer your questions and refer you to people that are professionals when it comes to your money. And I apply the psychological strategies to win with real estate. So if you know of somebody who's interested in buying or selling a home, I would be more than happy to sit with them and come up with the strategies that they need to get more money from their homes, help them figure out the best bang for their buck when they're buying a home, best neighborhood, the best value. And if you're interested in searching for homes on my website, it is san diego search for homes.com. And you can also put in your address and get an instant evaluation of the value of your home. And then it will send you market updates in the next every 2 weeks. So it allows you to know what's going on in your neighborhood with the value. I'm Dr. Deena Stacer, the doctor that makes house calls.